Good day, everyone. This is Onion. Today is Wednesday, February 24th, 2021. Today we're going to look at Sundial and see if it's become a good buy at these levels or if it's still just a good day trade. We're going to go over some of the institutional buying and selling, the activity, some fundamentals, earning per share, and any other catalysts that might make this share price go up or down. So first, we're going to start off with the institutional activity. Okay, so I'll scroll down to the institutional activity for February 1st. That's basically when the spike was starting and all the excitement shifted over to Sundial. Any column in green is an added position, any column in red is a closed position, and any column in white or light gray, there's a change in position. So I'm just going to scroll up to the top of this report here, so you guys can pause anytime. As you can see, there's a lot of added positions, and there's also a lot of change in position and a lot of closed positions. So the sentiment is pretty much a mixed bag with the larger investors here. So next, we're going to look at the revenue, earnings per share, and the fundamentals of Sundial. Okay, so now we'll do a quick rundown of the fundamentals in that on Sundial. We're going to start with the analysts here. There has only been one analyst covering Sundial for quite a while, and it was a hold rating back at the end of January, price target of 40 cents. So whoever listened to this analyst was very smart because they got a good spike there. Looking at the fundamentals, let's see here. Okay, everything in this column here is SNDL, and everything here is the industry average. So as you can see, they're fairly in line with the industry average, except for a few spots. The operating margin and the profit margin is extremely low, negative 400%. Industry average is still in the negative, but this is really, really low. Return on assets, return on equity, and return on investment are all very low, below 0%, and the industry average is all above. And if we look at, let's see here, the revenue, $54 million. Industry average is 44 million or 44 billion, sorry, and you can see the market cap. So it's a very small. Sundial's a very small company compared to the industry average, but that's not necessarily a bad thing. Now let's just go over the overview here. Okay, so so market cap 2 billion, revenue $54 million, trailing 12 months. Shares outstanding 1.6 billion. That is a lot of shares, and a lot of people stay away from companies with this many shares. And they announced another, I believe, 98 million warrants going out, and the announcement of the $1 billion shelf offering. So, shares are going to continue to grow in this company, it looks like. Earnings per share over the trailing 12 months. Every quarter, you can see here it's been a negative surprise each time, and a large negative surprise, as you can see. Between Q1 and Q2 last year, they closed their factory in British Columbia, one of them, and you can see that was right here. And now the sales revenues reflecting that. So there's a lot of excitement on this announcement that Sundial closed the $22 million investment with Endiva, and that was to acquire 18% of the company. So we'll take a look at Endiva now, see what kind of company they are. I actually traded them about a year ago. They've always been a penny company, under $1, very, very small. They trade on the venture exchange in Canada, and basically that's similar to the over-the-counter exchange. It's where small market cap companies go and start out. So you can see here the market cap in Endiva is extremely small, $60 million or 60 million, and revenue of $8 million per year. So very, very small company. I don't even think they don't even have the earnings announcements up here. So, it's not big enough yet to really get reported on. Fundamentals here, not too bad. Again, they're pretty much in line with their industry average, but operating margin, profit margin still, below negative 100%. Negative return on assets, equity, and investment, but so is the industry. And if we look here, so here we go. So The revenue is $8 million compared to the industry average of 388 million. So this is an extremely small company in comparison to the others. So it's Sundial bought 18% of this company for $22 million, right? So the market cap was 60 million. So I don't know, was it a good investment or not? Well, the future will tell us that, right?
So the positives for Sundial is with that recent spike in share price, they sold some of their shares, they paid down all their debt, and they made an 18% investment in Endiva. Uh, Two very good forward-looking things, very, very positive. The negatives, though, is the share float. Currently 1.6 billion. That many shares in a small cap company scares big money away, and now there's even possibly more dilution with 98 million more share warrants that can be issued, and even more dilution with a possible $1 billion worth of shares sold in a shelf offering. So those are two very bad things. And then the earnings are coming up in March. There hasn't been any change in production or revenues, so the last 4 quarters have had negative earnings and a large surprise each time. So if the share price is high when earnings comes in and they have another negative surprise, that will definitely cause the price to fall. Okay, so if we're going to look for a fair value or a target entry on Sundial, we're going to use the trailing 12 months revenue. Sundial already mentioned that the revenue will be down for 2021, especially closing that plant in British Columbia. But we're going to use 55 million as an example. If the industry average is 30 times the price to sale ratio, that's 55 million times 30. So their fair market value or market cap should be 1.65 billion. You divide that by the share float, and that gives you a high fair value of $1.03 per share. So my fair value entry point for Sundial, if I were to invest, would be roughly 83 cents. And the way I get to that um, amount is I'm going to use a trailing 12-month revenue of 55 million. They did mention again that the revenue is going to be down this year, but I believe the float is going to get diluted even more throughout the year. So if we use trailing 12 months, 55 million times a 30 price to sale ratio, and then divide by 2 billion, you're going to get a price of 83 cents. So I have a star beside that because until the share float is dealt with, I do not believe this is a good long-term investment. So overall, for Sundial, I don't believe the fundamentals or anything really supports where the share price is. I do believe it's going to continue on a downward trend below a dollar, but it has been a perfect day trade. Almost every day since the spike, it's easy to get in. It's basically textbook and follows the RSI. So as a long time hold, if you are interested in getting into Sundial, you may want to wait a little bit. Earnings are coming up in March, and I'm sure there's going to be some guidance as to where this 18% acquisition with Indiva is going, and then any other future guidance. So good luck to everybody. I hope this helps, and have a wonderful day.